If you look at my total portfolio, I've got over 100 names. But if you look at the drill story and the producer side, so they're the three buckets. They're producers, developers, and drill stories. I'm probably 65% producers and mostly growing producers. I'm probably, call it 20% developers. And then the balance was at 15, I think it leaves, is our drill stories. So, as I said, and this is accounting for the risk we talked about earlier, a producer that's making money, there's less risk. And by the way, they can do just fine, especially as the multiples expand. I mean, some of these are still quite cheap. So yeah, I mean, I think people should lean toward the producers. And then, if they want to take a flyer on a drill story or a developer, that's fine. But they should recognize that they're taking a bit of a flyer, that it's got more volatility to it. And, I'm going to give some names, but I should also caution, I mean, I buy and sell these things all the time. I mean, there's some names I would have given you 2 months ago that are now up 150% from where they were 2 months ago. And frankly, I've sold them down quite a bit because they got ahead of themselves. So, I think it's important to, whatever you're looking at, to understand when the thing you're looking at is cheap and when it's expensive. In 2011, it was as high as 20. I think a good long-term average is 8 to 10. I think some of the better companies in my portfolio are trading at 2 or 3, depending on whether you're looking at, that's probably 1 year out. If you're looking at trailing, maybe they're trading at 4 or 5. So I think that, what that implies is these companies could actually double in value without earning any more money. Just, as these stocks get recognized, as the Mag 7 becomes less attractive, and gold stocks, which are up for the year, I'm up 30% this year roughly. Now the Mag 7's down, it's, I don't know, a similar amount, but some amount. And, as this whole category becomes more attractive, people are going to be willing to pay more per dollar of cash flow. So that's probably the best metric. I mean, there's different metrics for different areas though too, Trey. I will say, like in the drill story area, I look at market cap to how many ounces I think they have. So an ounce in the ground, every ounce in the ground is theoretically worth $3,100 once you pull it out. Well, I've got some companies that are trading at $9 per ounce in the ground.
Wow.
Now, it's going to cost money to get it out, but it's not going to cost $2,900 to get it out. So, or $3,000 to get it out, right? Sweet spot, in my opinion, is when they've kind of gotten to 100 million or above, because below that, the financings are tough. They don't have enough following. The institutions can't buy it. Et cetera. Maybe the sweetest spot is more like 500 to $1 billion, because you can still from 500, to go from 500 to $2.5 billion, you can do that. I mean, when you're Barrick or something, you got a $40 billion market cap. You're not going to go to a $200 billion market. It's not going to happen. So, right. But some of the biggest multiples are below 500. Some of them. I mean, I've got a lot of companies that are 100 million. Now they've got financing risk because at that size, few people pay attention. But if they're fully financed and they're generating cash flow, well, then that's a nice place to be. I mean, I'll give you my favorite silver producer right now, and it's up 100% from the end of last year. So you're not getting it as cheap as I bought it, but Vino Silver, has got a $270 million market cap, and these guys are going to grow production. The silver price is going to go higher. Their margins are going to grow. I mean, I was calculating it yesterday, just playing around with the numbers. I mean, if we go to $50 silver in 4 or 5 years, which I think is very doable, very few pure play silver companies. I mean, all these companies have silver and gold. I mean, Pan American used to be all silver. Now it's probably almost 50-50 silver gold. But there are some pure play silver companies. I own all of them. And I love them. As we all know, silver is a smaller market than gold. It's a more volatile market than gold, and it's a two-tier market. It's not just a monetary metal. In fact, it's really less of a monetary metal than gold because central banks don't really hold silver. But it also has all these uses that mean there's not much stock laying around, because it gets used in solar panels and electrical chips and so forth. And so, when things get tight in the silver market, as you know, it goes up faster than gold.
Right.
And so if we're going to have a bull market in silver and gold, which I believe we're in and we're going to have, silver's going to go up faster. I mean, silver's at 30 now. I mean, silver could double to 60, in my opinion, in the next year and a half, 2 years. I'm not sure gold's going to go from 3,000 to 6,000 in the next year and a half to 2 years. I mean, it could go to 4,500. And the silver miners are more levered because they have actually there's more margin in the gold miners, and the silver miners, the ASICs and the silver miners are running in the 20s. mid to high 20s, and silver prices until recently in the low 30s. They weren't making much money.
Mm-hmm.
And so when suddenly if silver goes to 35 or 40, percentage gain in their profits is going to be much larger than the percentage gain in gold company profits as gold goes higher. So silver, and to my portfolio, I probably have a 30% kind of pure silver weighting. I mean, there are really probably only 10 or 15 names that can kind of say they're more or less all silver companies.
Mm-hmm.
Most other miners have a mixture of silver and gold. They're both going higher. I'm just not smart enough to know how, particularly copper, which is somewhat driven by economic growth. And I think we could have a tough economy here.
Mm-hmm.
So Barrick is pivoting towards copper, and that's fine. I'm not a copper guy. I'm sure platinum's going up in value. I know it's limited in supply. I have one small drill story that I own that's silly cheap. I've been buying it recently, called Clean Air Metals.
Mm-hmm.
It's a great platinum palladium deposit in Ontario. But in general, that's not the area that I'm in. And same with uranium. I mean, there's so many other minerals. I've really tried to stick to what I consider the two pure monetary metals, or almost pure. As you know, there are about 500 of these stocks, and I sort through them all the time. And it's hard to keep on top of them.
Right.
Know which the best names are. So that's a full-time job. The mines become more profitable. The governments become more greedy.
Mm-hmm.
Yes, there are some areas that I will not go into. There are areas that I'm very leery of. But in general, there are also opportunities in some of these less developed areas. I mean, I know there are people who say, well, I'm only going to buy gold stocks in Canada, the U.S., and Australia, and that's fine. But you pay a higher price for doing that. And as I say, I'm not sure that geopolitical risk is not necessarily as low as people think. Africa, actually, in my view, has been unfairly painted as a dangerous place. I've made a lot of money investing in Africa. And as it turns out, Africa's got an enormous gold endowment all the way up from the Witwatersrand all the way north, that whole western side of the country. And many of those countries are fairly stable, like Cote d'Ivoire and so forth. So they can try and increase, their revenues, and they hold you up at times. I mean, to the miners' credit, the miners are all kind of pretty well united at the management team level of saying to the governments, hey, government, you mess with this and we're out of here, and there's no way you can produce this gold. Mm-hmm. And so the government smartly then says, okay, I'll settle for my 3% NSR, or for my 30% in taxes, or for whatever it is I get, because that's real money to me that I need to help my people. So, but that's not to say, there haven't been problems. I mean, there are problems, there are issues, there is some unrest in certain parts of Africa. I mean, one has to be somewhat careful. I actually thought more recently, some of the South American things have kind of gone more in the wrong direction. Peru, well, Argentina was really a problem when they had capital controls, but Malaya is kind of unwinding that, which is a positive. The Peru stuff is not great, to be honest with you. There have been some ups and downs in Mexico. It now appears that we'll be okay there, but it's always a risk everywhere. Ecuador for quite some time was a problem. Venezuela has always been a problem. Wouldn't touch anything there. But it's really kind of case by case.